Hi, my name is Adam Smith. I am the Kallanish Global Editor. 2020 started, finished, and will be remembered as an extraordinary year. 12 months ago, no one could foresee the extent to which the COVID-19 virus would engulf the world in a pandemic, affecting the daily lives of everyone on the planet. Cue China's rapid economic rebound from the initial virus impact. The Asian giant continued to grow steel output after quickly bringing the virus under control, driving imports of iron ore, but also billet and hot rolled coil. Its appetite for steel imports was met by suppliers from around the world and virtually single-handedly propped up the global market. Later in the year, steel demand also recovered in other regions, such as the EU and the USA. In the EU, numerous blast furnaces had been idled as a response to the pandemic impact and could not be brought back online fast enough to meet the sudden upsurge in demand. Iron ore and scrap supply disruptions as a result of the pandemic, meanwhile, caused raw materials demand to outweigh supply. Prices of major ferrous products reached multi-year highs in recent weeks. We saw 62% Fe iron ore go above $170 per ton CFR China. HMS1 and 2 8020 scrap went above $480 per ton CFR Turkey, and CIS billet reached $600 per ton FOB Black Sea. The feeling among many market players now, however, is that prices have peaked. Although many are reserving judgment until after China's upcoming New Year holiday, the country is seen shifting towards consumption-led growth this year, meaning a reduction in its overall steel demand. Its wave of steel imports seen last year is unlikely to resurface in 2021, and there are signs Chinese suppliers are again growing their presence on export markets. Despite this, Chinese steel production is expected to grow further this year. Iron ore prices are expected to retreat in the coming months as Brazilian supply of the raw material recovers following disruptions. China's iron ore port stocks are likely to increase even at high output levels. As demand fades from the seasonal high in the second quarter, mills will moderate their purchases and prices should come off. Steel prices should also come under pressure as Chinese exports pick up. Turkish steel mills are meanwhile observing an increase in scrap supply since the turn of the year, while rebar export demand appears to be softening, suggesting scrap prices have peaked following their stunning rally since November. Question marks remain over the impact of China's return to the scrap import market and Russia's tightening of scrap export restrictions. Taken together, these suggest a significant boost to international scrap prices. China could import up to 10 million tons of scrap this year. However, it will only import scrap if it is cheaper than local material, while Russian scrap exports are expected to continue regardless of the new rules, as long as prices remain high, with the World Trade Organization seen getting involved if they do not. The legitimacy of a possible EU scrap export ban would also be brought into question. In the EU and USA, hot rolled coil prices especially continue to be elevated by returning demand and continued supply shortages, coupled with import restrictions. In the US, raw steel capacity utilization remains at just above 75%, down 10% on year. Some see the incoming Biden administration potentially easing Section 232 restrictions, but are in return hoping for increased infrastructure spending that will boost steel demand. Although most blast furnaces in the EU have been brought back online and production has recovered to pre-pandemic levels, buyers have maintained thin stock levels, and demand is likely to keep the market firm at least into the second quarter. Recovering blast furnace output in Europe and Japan will support iron ore prices in 2021. Few people know what 2021 has in store. But after weathering the initial pandemic lockdown and fear last year, steel demand has rebounded and prices risen to multi-year highs. As demand outside of China continues to recover in 2021 and COVID-19 vaccines are rolled out, steel market sentiment should recover further. Although the virus remains, its fear factor is diminished. And unlike during the spring 2020 lockdowns, industry has learned to continue operating amid the pandemic. COVID-19 is, however, likely to dominate markets again in 2021 and could still throw up new surprises that have unforeseen effects on steel supply and demand. At Kallanish, we will continue to offer our robust, independent, contextual, and unbiased market coverage and price assessments, and we look forward to continue serving you. If you are not a full subscriber, opt in for a quick trial to refresh your market knowledge.